Good morning, everyone. Oh, charts. We need charts. Hold on. Those two handsome guys aren't going to cut it. We got charts to look at. All right. So it was coma-like trading yesterday until the last few minutes of the day. And I don't know. Maybe it's one of those days it went up because it didn't go down. But, it was at support. Just trying to stay with the technicals. Was down here at the prior low. Good morning, Fabio. And it was just hanging there, doing nothing. We had this little blip up there, that little wide range bar. And one of the struggles for all of us as traders is, you just see that things are going nowhere all day long. And then all of a sudden you see this little setup where, and I was there too, meaning I saw this. I even mentioned in the room, S&P's probably hit the low and reversed, and it starts to come up and pulls back. And that pullback and reversal there, you would have had to put a stop under the low of the day. It is what it is. But to expect this rally, you struggle between why should you have expectations if there's room to run. And there was some. I mean, there was pivot highs over there to the left, but it sliced through it like it wasn't there. So a bit of an abnormal type of move, but this hasn't been a normal market. So we'll see what today brings. Things are just jiggling around here this morning, and this market does a lot of jiggling, and then all of a sudden, makes a move. It's in new all-time highs, right? It was the same on Friday. In the last 15 minutes of the day, all of a sudden there was this pop. So should that be part of our expectations going into today? Well, I don't know. We'll see how the afternoon sets up. But this has created a void up above, I should say down below, because when you get a momentum move like this, now there's nothing underneath it. And so let's go to the futures. And we see, right, there's the move. There's the continuation, right, overnight. And then it starts to pull back. And this is part, if you guys remember in the green room yesterday, actually it was about Duncan, which is getting shellacked here this morning. It wasn't a pattern exactly like this, but it's the only thing I have to show the concept of how prices come down in a relatively sharp way. And you can see, well, it's kind of like Duncan right over here. And if you look at Duncan, had a pattern, something like this, where it popped up and it had a weekly reversal. Now, there's only a 5-minute chart, but all patterns are applicable. And so part of our discussion was, that's not a great short setup because it's sitting right on support. We could go and take a look at that. So I was doing lessons here with the update. And what I was referring to, Dan had mentioned why we wouldn't do it at that point in time. And what I said was the ideal scenario after a drop like that is a retest pattern. And once it makes that retest away from that support, that's usually where it's a good entry point. And it's got to be in a downtrend. So I just wanted to point out that pattern, but let's take a look at Duncan quickly. Okay. MG. So it was going up, and it had this relatively strong move off of the lows coming up here. And the weekly chart had a reversal, but this bar is not done. And so part of how I look at these type of strength moves against the bigger, stronger move, the higher time frame downtrend, and a strong move off of the low, is the ideal pattern is to wait for a retest that creates a double top on this time frame. Now you can see that whenever the news come out, this thing is collapsing down here toward $45. So patterns don't always set up exactly the way we want, but if we have a plan, that's what leads to consistent results, trading similar to the same patterns with similar money management, and sometimes news items are going to play havoc with that. It is what it is. All right, rest of the markets. All right, so we already looked at the futures. They're down here near this prior low and getting a topping tail today. It's too early to see whatever, we know what's going to happen there. We know the internals have given us warnings. We went over that, right? And it's gotten worse, right? The long term and equity up here as well. And some of the other things that have been going on that we've talked about is the breakdown in the transports. In the room, we talked about the fact that wood has already been declining, right? So these inflation concerns, oil is still strong. You can see it's still up here, but we looked at copper yesterday. We talked about copper in the chat room, how this is starting to move lower. So whether this is manipulation by the government, I don't think government ever manipulates anything, but it's a thought, proving their case as to inflation being just in the moment, not to worry about it, transitory, whatever terminology that they used. Some of what's going on here actually supports that. All right, I can see it here, Jacob. You can see in the lighter gray area is what's happening here pre-market. So copper is dropping, wood has been dropping, and stocks like Caterpillar, rails, trucking, all of those things suggest a slowing in the economy. So we've got a lot of conflicting information, and of course, what makes the markets act in an erratic manner. But just looking at, the Dow, got a topping pattern there. It just, the end of day rally yesterday just missed it tagging the rising 50 MA. We'll see what happens with that today. Futures just inside bar here, just chopping back and forth. There's just been lots of chopping back and forth, but tech finally new all-time highs. Right? So part of the theme coming into this week, with the internals giving us, hey, be careful out there. One of the themes has been, in our letters, that the NASDAQ will probably make a new all-time high. Look for Apple to bring up the rear. It did. It's down this morning, some amount on news. So the underperformers, playing some catch up, that would help the NASDAQ make a new all-time high, and S&P making a new all-time high. The Russell, was IWM. Seemed to be like it was gonna do it yesterday. It's up here a little bit this morning. Could that make a new all-time high? And so the idea is, here we have these internal screaming, be careful. We have different market indices at or making new all-time highs. And that the idea of, is this just a sucker rally? So when we see the week move from the bottom of the range to the top of the range, XLK, other techs that were weak going from the bottom of the range to the top of the range. Now we've got a wide range bar down. We probably should sell this today. Up at resistance to the top of the range, and so on. So the catch-up trades reaching their destinations, new all-time highs, internals saying be careful, and what is the shoe to drop that gets this market coming in? Yet to be seen. I don't know, but trade the charts, keep an eye on the exits, proper money management, and none of us get killed financially. Bonds coming in a little bit, which now interest rates coming back up after the breakdown, which the depth of retracement here, if it should happen. So one of two things should happen here. the depth of retracement would, if it was to come back up again, would be was a downside shakeout. Right? This hasn't broken yet. However, if it goes sideways here for a few more days, opens the door to, hey, it got a little extended to the downside. It tried to go up and couldn't, and back down again. So set your alerts. Right? And you can use TBT or TNX. You can see, the breakdown in the ETF. We talked about the Head and Shoulders top. It's got room to fall. It's up here a little bit today. Set an alert at yesterday's low. See what's happening. Okay. And someone asked about the euro here. Daily 1, 2, 3 on the euro. Bearish 1, 2, 3. Looks like could be a 1, 2, 3, 4, right? Which is, here's the wide range bar, the inside bar. And today took out the high of the inside bar. So, excuse me, you have to wait to see where it's going to close. All right. So if it was to close like that with a topping tail, then the short is under today's low tomorrow. So you can keep an eye on that. Now, it's got this rounding kind of a top. You could even say Head and Shoulders type of a top there. And yeah, worth keeping an eye, see if that actually breaks. You don't have that much of a great void, but it's already tested the rising 50 MA and it's close to this pivot. So if this should fail, theoretically, this should go through that area and open up the door to coming lower. So let's keep an eye on that. So, well, let's let the computer keep an eye on that. Just looking at a few of the other currencies. Right, yen been going down. This is rolled over, which it should. And if the euro is getting weaker, the Canadian dollar should be, and that looks like it could be a better short if that's what you're interested in. It's got more of a void, and all this means that the dollar's going up. If the dollar's going up, it's been down quite a bit. It's one of the intermarket analysis concepts that supports companies doing business overseas becoming less profitable, which if that was this theme continues, then earnings contract, stocks go down. Tim saying to me, Greg, for rate outlook right now, German 10-year is best lead indicator for U.S. yields. Daily chart is a buy setup, yields higher. I'll take a look at that, Tim. And ultimately, and what you're saying, I'm assuming is the case, but the majority here are going to look at the 10-year, which is TNX. But I'll take a look at that. And oil, excuse me. That's the continuous. Oil keep marching up, and silver pretty much flat. Looks like it could roll over there. Probably just waiting for the news here. And it came off with a low there on the 200. Maybe Powell says, "Hey, I know what I'm doing. I'm going to stand pat here, and the markets will come into alignment with what I believe. Gold, maybe it rallies today or tomorrow." So a lot of things to keep an eye on. It's always the case when there's uncertainty. When everything's trending in alignment, we're all geniuses. And bull markets, I don't know if they could say this is still a bull market, but just a slow, grinding, self-correcting trend to the upside. And I much prefer the wider bars and ranges to trade rather than this jiggle back and forth. So all yours, Dan.
All right, good morning. Yeah, Jake's sentiment is in bearish territory, has been for a while. I think Greg just has been also showing the longer term breadth is at extremes, and the longer term OEX book call ratio, which, some people say is, more professional indicator. So yeah. All right, all our opens are fine. If you have any questions, ask me. But they all look good. You know what? We had a long discussion in the green room yesterday about the Fed meeting and why I think it's a much more important one than prior ones, on and on. We can talk more, but actually Kramer, I think, is nailing it pretty well, in my opinion. It's exactly what I was saying yesterday, that the Feds, they orchestrate their language, a week ahead of time. It's going to be a beautifully orchestrated sentence, blah, 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 whatever they can to not disrupt the market. But it'll come out in questioning. And he gave an example. Do we really need 40 billion a month of buying mortgage-backed securities when you're creating another housing bubble? And then he might say something about, well, yeah, maybe not. We'll look into that. And then so Kramer said, that could happen at 247. It's not going to happen at 2. And then we have a 5-day sell-off. And so that's a scenario exactly what I'm concerned about too. That's all. Jim, the trades you have the head on the green room and trades get posted, tell her. Well, Jim, here, we'll talk about it more later, but I only post official trades that go to our advisory letter or weekly letter that I find during the market here. And there was also a really good article today on Musk and Bitcoin. I'll talk about it later when we're slower. And there was another interesting article. We can talk about it later too, but it said $11 trillion of debt that companies have raised since coronavirus because of the cheap money and, need for it. But we'll talk about that later. All right, Sage, biotech, ugly gap down. I don't mess with those. Dunking, the Hindenburg is the fund that, short sellers, they write reports. And so that's getting whacked here today. I'll watch it anyway. I like watching anything that moves. Boeing, there was some news at the G7 that they settled some tariff dispute, but that was an ugly top breakdown. Could give you a day trade long, gapping up if it holds right here. If it holds on this minor support on the 15-minute chart, we'll come back to it. Hey, for those of you that follow the Reddit boys, is Wish on their list? Is this a Reddit toy? It's not a great daily, but if so, let's keep an eye on it on the daily. It is, all right, thanks. Yeah, let's keep an eye on that. Thomas, Fubo, Nicola. Fubo, I don't see any pattern. Fubo, Nicola, I don't see any pattern. You got to tell me what you're thinking. Have no idea. We're actually short $14 or $15 puts. I got to look with a stop under. Woof. Okay. That's, could be a buy setup right here. And hey, McGraw, I saw what you were typing there when Greg was talking about, oh yeah, this move was obvious in the afternoon because, they got expiring puts, this and that. So McGraw, I'm not being critical. I'm asking a favor of you. If, I don't need to hear that after the fact, right? So tell me, help me help you. Help me help you. If you told me, Dan, at 2:30, just tell, I don't need, well, yes, I like reading it, so maybe I can learn over time. All you have to do is tell me, Dan, get us into a bullish setup in the spiders into the close. That's all I need to hear. Because of, expiring puts, blah, blah, blah. I would have got us in, we were talking about this wide range. Here's a 1, 2, 3, here's the retest. But, so pointing to it afterwards, that didn't do me much good. What else do we got? AR, UPST. We had a put spread on this, and we actually hit our back half target on this rally. We don't short anything, JR, down, look at this. This thing is falling, $60. Fluid multiple bars down to the 50 and support. No way would that be a short for me. Franklin, Zoom, 355. Once again, we do not short put spreads far from support or the 20 MA. Okay. You know what we should do one day, when we have time? It's just come up with it, and it should be part of your trading plan. And it's just, these are some rules that I never violate. And maybe we come up with the top 10 together just as a brainstorming exercise. But that would be one of them. It's just a no. I don't do it. Don't short put spreads far from support or the 20 MA. Let's see, MRO 1312 next week. And it would be okay over yesterday's high, because then it would be, trading over 5 bars with red bar ignored, topping tail ignored, and it's still holding the upper 50 of this. But as of right now, no way, no way. This tail yesterday made a new high and got rejected. Okay, so that's the difference there. MA same real weather, but absolutely, Dallas. Absolutely. Let's continue here. Valerian, holy. Guys, it helps if you tell me what you're thinking. This is kind of a 1, 2, 3, but we only do 1, 2, 3s from consolidation. This thing's up 7 bars at the top end of the range, far from the 20. So on the daily chart, I have absolutely nothing. If it maybe takes out a 30-minute high on the 15-minute chart, it could be a day trade, would be okay. It is a bullish weekly, but if you're trading the weekly chart, then you need a big old stop of last week's low. So you see the difference of how I use these 3 charts to answer your question, even though you didn't ask a question. I had to kind of come up with different scenarios for you. Lou Pelletier. That one's much, much better as a new trade. Why? Greater than 100% retracement and bullish price action at resistance going sideways. Bullish gap up, it's given up the whole gap pre-market, maybe 30-minute high. So yeah, that one's a lot better. Had a nice bullish turn here. We've done MT lives on trading the turn. And this is the turn that started with what we call a gap and snap. It's not and it's also a form of a bottoming pattern, but that happened more in a V Victor formation, as opposed to a multi-week bottoming that got above the 20. Actually, I think I'm going to use this example because I'm one of these trader corner groups, kind of things that Greg and I lecture at every now and then. I'm doing one on bottoming patterns the last Saturday of the month. So I'll actually talk about that one on there. Greg, I just had a UNP alarm go off. We're not in it, but I'm going to cancel it now. So UNP cancel. We canceled UNH also yesterday. This WEX, that's a disappointment, under 201 now. So UNP, you're gone. Dollar General is triggering. Let's take a look at it. We don't trade in the first 5 minutes. Dollar General. Okay, so look at DG. Yeah, clean is a Reddit boy toy. Yes, it is. But we need a pattern. We're selling off right now. I'm Square from yesterday. Square, this is a beautiful 15-minute chart on Square yesterday. And looks higher. Amazon, remember Jim, multiple bar run, far from the 20. We got FOMC, so not for me. Not for me, my friend. All right, where was it? Dollar General. All right, see, this looks fantastic. It's not a 1, 2, 3, but it's a breakout and an inside bar. Small little gap up. Market coming in. So you know what I'm gonna just arbitrage. You know what? I'm gonna say hold off, and I'm gonna watch this. But it looks great right now. All right, I'm kind of talking myself left and right because I'm trying to come up with a rule that'll give us a little comfort. So what I'm going to do is change this to 15-minute high. So just let the market settle down a little bit. So that just buys me some time, but it looks fantastic. All right, XLK we're at half. It looks Square got slapped down. The CSX, Greg, shoot.